Hello, this is Mark from Right Line Trading, and I thought we would do a review of our trading of crude oil today, October 11th, 2013. Um, I wanted to bring to everybody's attention the fact that we're going to be giving a webinar on onlinetradercentral.com. That's onlinetradercentral.com, Monday, October 14th at 4:30 p.m. Eastern Daylight Time. The title of the webinar is Order Flow Fractal Analysis. Sounds extremely complicated, but here is the beauty of it. At Right Line Trading, we do it for you, and the fact of the matter is, we do it for you. And the webinar is free. Um, I was going to post the link, but it's too long. If you go to onlinetradercentral.com, you'll find it real easily. And if you do sign up for the webinar and are there throughout and listen to and make it to the end, we're going to make a really nice offer for the software. So let's take a look at our trading of crude oil on today on Friday. Now we have a long signal here at 8:07, which we cannot take. This is the 50, and this is the right line trend line. It's a modified 15. Its speed is somewhere between that of a 15-day exponential and that of a 15-day simple moving average, and it's yellow and chop, red when it's moving down, and green when it's moving up. When price action is between it, we do not trade. Now it's between it all the way through here, and even though we get these two up signals, we don't take them. And there's a move to the upside, and we simply cannot. There's no valid signal to catch this move. As we come back down, we get an order flow signal, which you can see down here. Now we have actually two order flow indicators. We have this indicates order flow asymmetry. And what this tells us is most people in this long candle are long at the top. And they are really banking heavily that the move will continue, because if it doesn't, they're going to be suffering very, very quickly, because the buy orders here are clustered at the top of the candle. Then we have order flow direction, which is the first line of the three-line indicator. This assimilates data from multiple time frames. The top line is order flow, the middle line is stochastic, and the lower line is momentum. Now, here is where we have a congruence of colors on the three line, and you can see that it outlines the paint bar in a color. Now, I choose to outline that paint bar in yellow. There's a setting in the indicators where you can outline it in any color that you choose. I did not go short here because this was into the 50, and I used Steve Nissen's definition of a break of a major trend line, and that the candle has to close 2/3 below in order to officially break the trend line. So this had just squeaked below the body of the candle, so I did not take that signal short. But we still had order flow momentum and stochastic with us here. We were in short one tick below the close of this candle, which was 70. We were in at 69. After we already had the trade triggered, we then got a triple momentum signal, which tells us that momentum is aligned with us on 3 time frames. Down we went. The trade didn't look back at us for a second. Hit a low of 31. The entry again was at 69. That was, I wish I could add, but now this was about 60 ticks on a 10-tick trailer, would come back, take you out of 10 of those. So this is about a 50-tick trade. Now, as we move over, so we're quickly up 50 ticks on our first trade. Now we only go short below the 50 and below the 15. And as long as the 15 is red, the downtrend is intact. We get another signal here, candles in yellow. Momentum, stochastic, and order flow are with us. We're in one tick below the close. The close is at 07. We're in at 06. And this takes us down to a low of 60. So this is another 40. This is a 40 tick trade. So we have 40 and 30. So we have about 70 ticks in the bag on our first two trades. Not half bad. And we actually had a great signal here. If we would have missed this candle, we could have gotten in here at a lower level where we had buyers try to come up and move the market up. They were swamped by an engulfing sea. We were in one tick below the sea, and you would have taken it down. You would have gotten a little bit less on the move to the downside, but still would have gotten a nice piece of the move. This was the better entry, and we got more of the move. So we have 70 ticks here. Now if we move across, we have a short signal here we don't take. It's into the right line trend line, which is yellow. We do not trade a yellow trend line. That means we're in chop, and no matter what signals we get, no matter where we are on the chart, we simply don't trade. So we let all of this happen, and we just sit and watch. Now we have a short signal here, but the trend line is turned green and is moving up. Therefore, we don't take that short signal. Long signal here into the modified 15. It's yellow. Again, like I said, it really prevents us in a very major way from trading chop. Now we have a potential short here, but I don't like to trade, and as part of the right line rules, we like the 15 to be below the 50 in red, or we like the 15 to be above the 50 in green before we go long. And so, although this was a potential short setup here, the 15 was above the 50, and therefore we don't trade it. Now, it may sound a little bit complicated, but it really is very, very intuitive. And these are very simple rules. We want the 15 to be below the 50 in red, or we want the 15 to be above the 50 in green before we're going to take a trade. Any other setup, we ignore. We really respect market structure and price action. And this is our way of doing it. And by coloring the modified 15 or the right line trend line, either yellow, red, or green, really gives you a good idea of where you are. Now, right here on this candle, the trend line is green. You know, it looks like it turned yellow, but it didn't turn yellow till the next candle when the market was already off to the races. And we got two signals here to go long. We are above the 50, we are above the 15. The right line trend line is green. We've got order flow, momentum, and stochastic. All green on multiple time frames are in our favor. The candle's outlined in blue. That indicates that without even looking down at the three line. And this X here shows that we have momentum with us, and that's assimilating data from 3 time frames. So we have fractal analysis telling us on multiple time frames the market is now moving to the long side. We're in one tick above the candle. The close of the candle's 04. We're in at 05. It just fires right up to a high of 39. This is a 35 tick trade. So we had 70 ticks. We're now up about 100 ticks. Now we have nothing. We're not taking this short trade. The 15 is above the 50. We don't take anything here. There's nothing. No signals. No valid signals. And we finally do get a valid signal here. We now have momentum, order flow, and stochastic in our favor. We have the 15 above the 50. The 15 is green. We're in one tick above the close of this candle. The close is 43. We're in at 44. The high of the move here is 70. Oops, sorry. The high is 84. It's a 44 tick trade. So we're up about 140 ticks on 3 trades. No losses. This entire section here is in yellow. We don't care what we see. We don't care what signals the market gives us or the system gives us. When the right line trend line is yellow, we simply sit on our hands. We unplug the mouse. We just do not trade. Here's our third signal. It's a beautiful momentum trade right here. We're going to get right at the close of the candle. We also have momentum, stochastic, and order flow with us. We're below the 50, below the 15. The right line trend line is red. You can see this is the same pattern recurring over and over again. The close of the candle is 43. We would be in at 42. The low of the move is 26. That's about a 15 tick trade. So I think we're at 115 ticks. I've forgotten how many ticks we made before, and I keep a pad and paper, which I don't have with me, on how we did in the room today. But I think we're up about 110, 115 ticks. Now this is a beautiful move to the upside with order flow, stochastic, momentum with us. What happens is there's a move to the upside. It's signaled by the A. The B candle, sellers try to push the market down. They're swamped by buyers. And as the buyers push the market up, all of these sellers are stopped out and the market fires up. The problem is it's right into a pivot. And although it was a successful trade, and it really, it was a 25 or 30 tick trade, by right line trading rules, we do not trade into pivots. And therefore, this was a trade this morning we didn't take. There are enough very high probability winners where we don't have to trade anything that's even close to risky. And trading into a major pivot like this is a risky trade, even if it's successful. So this was not a trade, even though we did get a nice signal. Now, I want you to know that in a move like this, you're going to get the A, you're going to get the B. Now, the A is the start of the trend. Then the B is going to flash. If the candle is a pullback candle, the B will print. The C will flash. You can't see it because it's overwritten by our X, which is our triple momentum signal. But if you look here, you can see the C. Now, the C will only print if the C candle does engulf the B. Now, if it does print and the signal fails, you will see it clearly as the market coming right back down and overrunning the long C candle. So we don't have bells and whistles or buzzers that signal the entry at candle close. What we do is we have the signals flash intra-bar to tell you that a signal is coming. Now, on a range chart like this, is an innate range, I already know where the candle's going to close. And I know if the C is going to print, I know it has to close right about here. So I have my buy stop order already set to go. If the candle does not engulf and then move one tick higher, the trade doesn't materialize, and I'm not in the trade. And the C will not print, and the pattern will go away. If it does print and is successful, I have a nice trade. If it ticks me in and then comes back down, you're going to see this as a failed C. Now you can see here, this is all chop. We're not going to take any signal here. We do not trade between the 15 and the 50. Nothing here is tradable. Now here we have a C candle with a triple momentum signal, but if you look at the middle line here, right here, this is stochastic. At multiple time frames, stochastic is moving up. So we simply do not take this trade. We're not trading with stochastic on multiple time frames. We don't want to take it, and we're only taking extremely conservative signals. So we're ready at 12 o'clock. We'll take a look a little bit more. We had stopped by now. Now we're trading into a low pivot, so there's no trades here. And if we were still trading, we've had a nice long here. Plenty of room to this pivot for a first target. Momentum, stochastic, and order flow line up. You would have been in one tick above the close, which is at 58. You would have been in at 59. Let's see how high this move was. This is a nice move. The high was 10. This was a 50 tick trade. We had already, this is at 1400 hours Eastern time. This is 2 o'clock in the afternoon. We're no longer trading. We're already up 100 ticks. But if we had stayed in the market on a Friday afternoon, this would have put us up 150 ticks. So we had 3 valid setups in the course of our trading day. They netted us 100 ticks. We had no losers. It's a very conservative system. It keeps you out of chop extremely well, and market structure has to be appropriate before a signal is valid. If you adhere to the rules, you have a little bit of discipline, and you have patience, and you trade with order flow, with momentum, and with stochastic on multiple time frames, this system is going to net you a lot of money. I've been trading this system almost 5 years, and I've been trading 10, but I've only developed this system in the last 5, and it's really a long time since I've had a losing week. I've certainly had some losing days, but I really cannot remember the last time I netted a losing week. And crude oil is a tough market to trade for most people, but it is not a tough market for us to trade. Now, we also watch gold, and I also watch the Russell. The Russell's kind of a pet market of mine. I really like the Russell 2000. And every now and then we can catch a 4 or 5 or 6 point move in the Russell. So I hope to see everybody in the online Trader Central lecture on Monday. We will be making a special offer to those of you that sit through it. And it should be very interesting because I'm going to go into a lot more detail about our system. And I hope you all have a great evening.